closing beat, everybody. Happy Wednesday. Yeah, Wednesday. Hope you're having a good day out there today. This is a quick stock market update show that we do. Call it the closing beat. We'll go over the stock market today. We'll go over all kinds of good, interesting things out there for you. And as always, at the very end there, if I have a chance, I will answer any questions you have. We're playing a game. It's called Guess the Dow. If you want to go to jazzwealth.com/guess the Dow, tell me where you think the Dow will close next week. If you're the closest without going over, we'll send you a $100 gift card. Our class tomorrow night is on the Nest Egg action items. For those of you that don't know, Nest Egg is a financial planning software. It's actually called Right Capital. They just let us put our name on there, so we did. But we give it to customers as if they are also financial planners. So we don't hold back and say, well, you have access to this and we have access to this. We just give you full access to it, allow you to participate with us on any financial planning. And so our class tomorrow night is going to be on what we call the action items inside of Nest Egg. So in Nest Egg, you create an entire plan, what you kind of think you're shooting for, and then you can adjust the plan or see different scenarios against your plan, comparables, by using the action items on the different pages. So we're going to go through those, and we'll use our test subject, Mr. Louis Armstrong, and their plan to kind of illustrate that. And of course, I'll take questions. That'll always be in the dojo. You just come on over. If you're one of our customers, you've got an automatic invite to the dojo. It's a video library at the moment, but we are working on expanding the devil out of this thing. And so basically all the classes in there, previous classes we've done are listed, but tomorrow at 8 o'clock Eastern Time, I just kind of pop up right here. It turns into a live streaming session with the questions and answers and everything, and so that's where we have it there. Your jazz song of the day is by Brian Culbertson. What a awesome musician. Very unique skill there. More on the smooth jazz side, but he's got a song called It's Time, and every time I listen to it, man, I'm like, it's time. Let's do this. I get all pumped up. Kind of a cool song, so check it out. That is your jazz song of the day. I saw some of your comments on the jazz songs that you guys like. Incredible, by the way. A couple I hadn't listened to. But if you have a particular song you like that's in the jazz space, remember, jazz kind of encompasses everything. So feel free to post below in the comments if you have something you want us to take a look at. All right, let's dive into the stock market today. You've got the Dow higher by 115. What? It's kind of cool. S&P higher by 15. The NASDAQ higher by total. Well, I posted that wrong. I'm sorry there. I did it wrong. Anyways, all positive on the day. The NASDAQ and the Russell 2000 beat the S&P 500 today in terms of performance. The Dow was your underperforming area of the market. We were basically green all night. If you look at the stock market throughout the evening there in the overnight session, positive. It just kind of set the tone for the day. All of that turned out real good, and we closed at record highs today. The S&P and the NASDAQ closed at record highs today. We had Fed minutes come out today. Fed minutes basically just said, hey, we're good. We're going to be accommodative. We like interest rates where they are right now. Only sort of negative was what they didn't have any real serious clarity on the coronavirus. Nobody really expected them to have that, but they had a focus on, hey, that could be a headwind overall. We'll be monitoring and see how things go. But all in all, they said they were going to be accommodative, and that's what people were looking for. So they're happy there. Let me show something to you here. The housing starts numbers came out, blew past expectations. You go, well, what does that mean? Like, who cares if housing starts beat expectations, miss expectations? They're houses. How do they have anything to do with the stock market? They're actually what's known as a leading indicator for economic stability, or whether you're a bull or bear. It's something you want to take a look at. Housing starts have always peaked and started to decline 100% of the time before a recession. I put together a little chart here to kind of share it with you. Hopefully you can see it. There you go. We're looking back till the late 60s there on the charts. The gray area in the background is the recessions, right? Any recession in the stock market is highlighted by the gray span that you see in the background there. And here is the housing start number. So every time they peaked and sold off before recessions, every single time. So I just tried to highlight that there for you a little bit. My arrows aren't too perfect, but you get what you smell what I'm cooking, right? Anyways, here's the latest results there. A big spike in housing starts. So there was some assumption that maybe we were rolling over here going back to 2018. It's just not the case, at least as of now. We got a great little spike there in housing starts. So we'll see how that progresses going forward. That's basically that one. Just so you know, every recession has always been preceded by one of those housing starts rolling over. That's a 12-month average, by the way, if you were taking a look at that. Building permits also hit new highs as well, blew past expectations. Just remember, this is election season, so I'm going to try to highlight, things that are going wrong in the markets or economically, but I'm also going to try to stick with the things that are working. Housing starts are a great one there. You're going to see a debate later tonight. It doesn't matter what side of the fence you land on, but you're going to see a debate that largely tries to paint a picture that things are doom and gloom. That's what sells. It gets votes, right? So at the end of the day, there's really not a whole lot of doom and gloom to look at in terms of the economy or the stock market, unless you're one of those that feels like, well, this has gone too far too fast. If you wanted to pull back, that's a different story. But all in all, you've got great news in terms of economic indicators here, looking really, really good. So it's something, to keep in mind. The doom and gloom is really going to start perking up there. I also wanted to share, for those of you that play the housing market area, you're using an ETF, you like buying housing stocks, new home builders and things like that. Housing starts are actually a great indicator for your particular sector there. What we did is we put up the ITB. This is a direct play on the home builders. The XHB, I usually point that one out, that includes everybody that supports home builders in addition to home builders, but the ITB is more of a pure play, or it's the purest play you can have in the home building sector. And you can see the correlation pretty much spot on there between housing starts and home construction, the home construction ETF, if that's what you like to look at. So I just want to share some data with you. I don't know if this is exciting to you or not, but I just wanted to kind of point out a few things there in that respect. Now, if we look through the Dow, strong stocks in the Dow today. You got Apple moving higher by 1.5% on the day. It recovered all of their warning from the other day, just yesterday, right? So all of the concerns about the cheaper iPhone being delayed, demand being an issue, all out the window today. Apple fully recovering from that. You also had the financials in the Dow today. Goldman Sachs, JP Morgan. Goldman Sachs up 1.7%, back above the 50-day moving average, and JP Morgan had a strong day as well, 1.3%. Those were your, I know a lot of you have been looking for financials to wake up. They had a few down days there where the markets did. Yep, good recovery today. If you're looking at that, we'll cover that sector here in just a moment. Disney was also another one, bouncing right off the 200-day moving average, looking strong. Had a good day today, outperforming the index there. So those were your stronger ones. And in the Dow, on the downside, you got Walmart, just retracing all of yesterday, 1.6% to the downside. JP Morgan and Nomura dropped their price targets on Walmart by a few bucks there, so the stock hit a little bit. And Cisco continuing lower after its earnings gap down there, still within a range. It's kind of wiggling around. It's not very much of an exciting stock there, but continuing the decline from the earnings there. In the S&P 500, you got Concho Resources spiking today, 7.5%. Bank of America put their price target at 130, and I thought, that's weird. They went from 125, which is here, to 130. And I'm like, well, that's an awfully lofty 12-month target. So I looked into this, and the average analyst has a price target. And this isn't that they're behind and they have to adjust. This is them raising price targets. The average analyst has a price target of 114. So I don't know if that's a stock you want to look into, but it sure seems like a lot of people are very bullish on that one. And that sort of hit the street today, was like, wait a minute, these guys aren't lowering price targets, they're raising price targets, and the average target's at 117. A lot of research being done on that one. Hey, they also raised their dividend from 12 cents or so to 20 cents. So the Concho Resources being one of the outperformers in the space, or in the S&P 500 today. You also had, that's not going to work. You had Garmin, there you go, breaking out to new highs. That's going to be earnings related, and NVIDIA got an upgrade as well. Strong, 6% there, getting a little extended here in the short term, but those were your outperformers. On the downside, you had two REITs, and they're both in the same space, extra storage space and public storage. So extra storage space, or extra space storage is how you say it. Down 7% on the day. It's going to be earnings. They beat on earnings, missed on revenue, lowered their guidance, right? So not good going forward for them. Down 7%. I believe costs were an issue there. And that took down public storage as well, losing about 5.5% in sympathy there. And then there was another REIT in the space, V&O. This is Vernado. Down 5% on the day, breaking below the 50-day moving average. That's going to be also in the same space there. No real new. They reported earnings the other day, so that's in response to that one there. REITs were one of the areas that sold off today. Got a little extended in the short term. Stocks don't like to be extended. They like to breathe in, breathe out. So this is becoming that breathing out sort of motion we've talked about. Down 1.5% on the day. Your REITs officially pulling back, and it's largely because of those three names. It was a broad-based sell-off, but in general, those stocks really kind of helped hit things a little bit. As we said, financials and tech stood out today. Financials up 0.75%. I know some of you are looking for that. That's good news. JP Morgan, Goldman Sachs, etc. Tech stocks made new highs today. What else is new? 1.2% to hit new highs there. NVIDIA, right, getting the upgrade from Bernstein there. That's obviously helpful to the sector overall. You also had some names like Micron that stood out, about 4% higher on the day, and Qualcomm also higher, about 3% on the day. And that helped the semiconductors as well. They almost hit new highs. Yeah, it didn't quite get there, up 2.5%, completely recovering all of yesterday's decline. Like I said, it's most things still remain in an uptrend. Just some sectors are choppy uptrends. They get a little bit tough for traders. The short-term traders probably struggling a little bit right now. Long-term investors, like, I don't have a reason to sell. I don't have a reason to add more. I'll just enjoy the ride. So it's really a disconnect there. We covered REITs, so we'll move on from that one there. Oil up 2.5% on the day, a little bit more after the sort of physical session closed. Almost up 3% on the day, continuing its bounce off of lows. That's going to take the other spaces with it. So you had XOP, which needs a bounce here, up 3% as well. OIH, your oil service stocks, up 1.6% as well. So definitely helping there. Speaking of home builders, they did poke to new highs today, pulled back a little bit from the non-home building type stocks that are inside of that, as we discussed there just a little bit ago. Gold hitting new highs as well. That's 5 days up for gold, adding another 0.5% on the day. 5 straight days higher. Looking good there for the price of gold. That's people that don't believe this coronavirus thing's going anywhere, playing defense. And it could also be fund managers that need to stay in the market because they can't afford to tell customers they're out of the market, but they need a hedge. And so it could be that gold is where they're going to that as well. That's just, fund manager mindset there. But anyways, consumer discretionary up 0.5% on the day. Look, you got Nike inside the mix, started the day higher, finished up 0.5%, not too bad. Your normal stocks there, your Starbucks up 1%, trying to bounce off the 200-day moving average there. Las Vegas Sands getting a little bit of a boost on the day, 1.3%. This is all like positive coronavirus. Remember, we shared the stats with you yesterday, how the numbers are actually going down, and this is painted as this worldwide sort of crazy thing going on. But really it's sort of focused, at least as the stats that we have. And Amazon, there you go. Amazon, one of the FANG names, higher today, almost hit new 52-week highs in a consumer discretionary space. Communications services up 0.5%, new highs yet again. Investors love this space right now. If you take a look inside of that, you got Facebook, did not participate on the day. And then Netflix also. It did hit highs, but we'd say that didn't participate on the day. It was all the other FANG names that actually helped out today, but communication services not doing the trick. Alphabet adding 0.3%, and that's one of the bigger holders in that space. Okay, let's go on to some individual stocks here. Tesla, holy cow, $60 day. This is a wild, wild stock. So interesting to watch this thing move around. Adding another 7% on the day. Piper put out a upgrade to $9.28. It did hit that price target today. They had to go from $7.29 all the way down here. They had already raised their target. Now they went up to $9.28 there. They said that they're going to find the same success in the energy generation and storage divisions as they have with cars, and that therefore it warrants this price target. They are excited about that one, not only in the short term, but in the long term as well. Dish Networks closed flat on the day. This largely comes from the end of the day sell-off. Right about 3 o'clock today, the stock market started selling, giving back some of the gains there. It's obviously still positive on the day, but did pull back. And a lot of these stocks that maybe were a little extended, they pulled back as well. Anyways, Dish beat on earnings, beat on revenue. The number of paid subscribers declined, but it declined less than expected. So we expected it to go down. It didn't fall as much as everybody was thinking there. We'll get rid of this guy here. Let me just move this out of the way. Thank you for your patience. All right, Garmin breaking out to highs. We pointed this one out already. They beat on earnings, beat on revenue, growth across all brands there. They raised their dividend to 61 cents. So you got a dividend hike there on Garmin if you happen to be in on that one. That's good news. Uber. Come on, man. There you go. Uber a little higher today, 2.1%. They're closing their LA office. They're going to cut 80 jobs. They're trying to find a way to make a profit. People cheer that on. That's good for them. I mean, of course, got to do what you got to do. And they're in talks with DoorDash and Postmates to possibly team up. They've got Uber Eats, which is not profitable, Postmates not profitable, DoorDash not profitable. So they're all talking now saying, well, maybe we could do something together somehow and make this work. So Uber Eats not really going away. They're trying to find a way to partner, but no news out of that. There's been no deal. It's just been reported that they're starting to work together and start trying to talk about working together rather than being competitors in some fashion. Speaking of working together, you got Blue Apron down 17% on the day. It's just not going well for them. Cost to acquire a customer. Same thing in the financial services space. The cost for an advisor to acquire a customer is what holds a lot of advisors back, period, right? I mean, maybe a lot of businesses are like that, but in Blue Apron, that's it, right? It's purely all about the cost to acquire a customer. There's nothing else to look at. It's a service, right? So what's it cost to get a customer? How long do they stay? How much do they pay while they're there? It's not going well for Blue Apron. So they're looking, how'd they say it? They're looking for strategic alternatives. And that basically means they're up for sale, or they're willing to merge with somebody, do some sort of thing together. But that's a tough space right there for Blue Apron there. In earnings, they lost more than expected. They don't make a profit. Revenue missed. It just wasn't good for them in general. Tyson broke to lows today, kind of midday. It was down 3% to finish the day. They say they've seen a slowdown in their business, especially in China, since the ports are backed up over there. And so issues with Tyson, probably a warranted pullback. People were already started to sell that stock ahead of time. Best wishes for him. It's a good, strong stock there. So here's a little bit of a pullback in the short term if you like old Tyson. Okay, let's move on. You got 62% of the S&P 500 above the 50-day moving average. Small uptick from yesterday. We were at 60%. It's actually 62.5 if you want to split hairs there. But so looking good there, little uptick. 73 new highs today. You got a handful of names. I'll point out a few here that we didn't already talk about. A lot of the stocks we talked about did hit new highs. Let's talk about the ones we didn't talk about. Analog Devices, which by the way reports earnings tomorrow morning, got a spike there. Nope, earnings came out ahead of schedule there. They beat on earnings, raised the dividend 15%. Okay, so there you go. That's your new high there for Analog Devices. We will not be seeing earnings from them tomorrow. We've already got that. Up 4.5% on the day. That makes sense. A little bit of a breakout. You'd kind of have to zoom out. Maybe we could go to some longer term time period here so you could see that breakout. Just been flirting with this 120 area for a while. Today with earnings, obviously helpful to get it above that if you're a technical trader. Okay, let's move on. Again, I'm not going to cover the stocks that we already did that broke to highs. Teleflex breaking to new highs as well. Also a short-term kind of uptrend breakout there, up about 2% on the day. And Copart, there you go, tiny little breakout in an incredibly strong stock overall, up another 2% on the day. You got PayPal hitting new 52-week highs today. Nice little bowl shape there on the technical pattern. We'll see what that plays out to be. Newmont Mining hitting new highs as well. That's the gold mining stock that's done really well lately. MasterCard and Visa both hitting new 52-week highs today. Very, very strong stocks. And speaking of strong stocks, every day it seems like you got Waste Management and Republic Services, although both of them hit highs and saw some profit taking there. So is this finally the top in these stocks? We'll see. Remember the other day when it sold off a little bit in the morning? Bought it up right away. Is that tail you can see on the chart there. 2 days in a row to be exact. 6 new lows on the day. A lot of the same names in there. Marathon Oil poked to lows, but starting to recover a little bit. Little bottom dip buying there. Under Armour continues to sell off just a little bit. You got Ford hitting new 52-week lows at $8. A lot of analysts like this stock here. So I guess if you liked it at $8.50, you probably love it at $8. But a lot of analysts positive on this one. Closed flat right at $8 evenly there. And Fossil, there you go, hitting new lows as well. These guys got some issues there. My wife was actually shopping for a Fossil smartwatch, and she ended up going with Samsung anyways. There was no comparison when we looked at everything there. But anyways, Fossil hitting new lows as well. Let's see, some other stocks in the news there. Lazy Boy started off higher, finished the day, let's call it flat after that move. Beat on earnings, they missed on revenue overall, so big gap to start the day, but it did finish off the day lower. Bed Bath & Beyond, investors cheering, it was up 7% today, cheering the idea that the company is going to spend $400 million to revamp their stores. Basically, Bed Bath & Beyond said, we are hungry for change. That was his quote, the CEO's quote, not mine. They're hungry for change, and they realize that customers have too many choices when they come into the store. There's too many cooking spoons for them to buy. There's too many coffee makers for them to buy. So they're going to spend $400 million to simplify the whole process. I applaud that. However, I think they're missing out on the internet side of things. You know what I mean? You can't go, if you buy something online, you can't go pick it up at the store. They don't have the inventory kind of figured out online yet. I think they should probably work on that just a little bit as well. They're also spending $600 million buying back shares. you look at the other stores. Look what Target did. Look what Walmart did. I mean, you got all these other stocks here that are really fighting on the online space. What, you hoping to stay a brick and mortar? So I disagree a little bit there, but investors basically saying, hey, they're going to throw money at this thing. This is probably going to work out. So we'll see what happens. Bed Bath & Beyond obviously up today, despite my opinion. Okay, what else do we got here? After hours, you got some earnings. Let's see what's come up here. Avis Budget Group. Looks like a beat on earnings there. You got a beat on earnings, beat on revenue. They raised their guidance going forward, both revenue and earnings guidance at the top end of the range. The stock was already up 4.5% on the day. After hours, it is up 12 more percent, trading up at 48.39 at the moment. You got to zoom this whole thing in. Way up here, super extended in the short term. In fact, if the market's opened here, you've got a move of about 37% in just 15 days. So good for them. People out there renting cars. They were positive on the future as well. Zillow, which was up 4% on the day, reported after hours, it's up 10%. So trading at $60.50. They beat on earnings, beat on revenue. There's a couple categories people look at. Remember, they're in the business of actually selling homes. So they physically will buy your home and they'll go flip it and sell it for you. They did 1,902 homes in the last quarter. That's flipping on steroids there. Premier Agents revenue is up. That's always a focus there. Yeah, it was good earnings, right? Just a great beat there. Stock is up now 11%. Let's call it 11.2% after hours. That is basically what we have for that. Tonight, you got a Democratic debate, which will be kind of interesting because old Mike Bloomberg, who's spending tons of money to get attention, is now going to be on the debate stage. So that takes place in Nevada this evening there. The current election odds stand as such. This is not the political odds. This is the betting odds. These are people that are betting on who's the winner going to be, not run by like NBC or Fox or something. So these are the actual statistics. Bernie Sanders currently with a 45.7% chance to win the Democratic nomination. Mike Bloomberg sitting at 26.5. Those numbers are they're going to change by tomorrow. I mean, they're going to fluctuate. I'm not saying somebody's going to win. You got Mayor Pete sitting in third place with 6.9%, and this is likely going to change tomorrow. You got a lot of the Joe Biden, Elizabeth Warren, Klobuchar. You got a lot of their donors watching very carefully tonight. You would expect that if they don't have some sort of stellar performance that grabs everybody's attention, those donors are going to start headed over to the top candidates there. Money is going to go where attention ends up being. So that is that one. I hope you enjoy if that's something you're interested in watching. Okay, tomorrow you got AK Steel reporting earnings. You got Dish reported already. Holly Frontier, Hormel, Newmont, Viacom, First Solar. You got dividends coming out from International Paper, 51 cents, and Carnival Cruise Lines paying out 50 cents if you've been able to hold that stock and hang on through all the excitement. Carnival Cruise finished up 1% on the day, a little bounce off the bottoms there. And that's what I have for you. I'll take a shot here and try to answer your questions and see what I can do. I've got this new thing here. We'll go like this. I should be able to see more. There we are. The old Bloomberg's ads are paying off. Spending a lot of money. He's up, he spent over $500 million at this point. So interesting to see. I'll bet you that's a topic for the debate tonight. A guy trying to buy the White House. I'm sure they're going to use that term. Maybe that. Anyways. Return to highs on PayPal. You think it's as strong as... Yeah, PayPal looks good. I mean, obviously, the bull we talked about there, but breaking a new highs, the way it's moved to highs is not in an extended way like you saw on some of the stocks we talked about. This is a clean, consistent uptrend that hit new highs. A lot of times if a stock races to hit new highs, it loses steam at that point. People see that as a selling opportunity. You got a very strong uptrend there continuing on PayPal. If I owned it, there'd be no need to, I think, do anything with it. I think you just enjoy the ride. Microsoft's been strong. What do you mean poke to new highs? It's basically there. That's like a couple percent, if that, to get it back to new highs. Obviously, Microsoft benefiting more, one of the bigger benefiters of the coronavirus, really. So Dustin, just wondering if I open a traditional IRA in 2019 and converted it to a Roth recently, I only have to pay taxes on the gains I made. I'm phased out. I left the other. So if you had opened a traditional IRA in 2019, contributed to it, and converted it to a Roth, that money all becomes post-tax. If you chose it as a non-deductible contribution, that's slightly different, but not just the earnings in that case. If you made a contribution to a traditional IRA and you do not elect it as a non-deductible contribution, you would owe tax twice technically. So there's a key part to that. I did a class for customers on that because that happened a lot this year, where I have to pound it into you that you don't just get to make a contribution and then convert it and walk away. You still have homework to do. So we covered that for sure. Why do you think dollar cost averaging might not be the best strategy? My transaction cost is a little high. So that's an issue with sort of runaway uptrending markets. This is the one time where weekly contributions, like we say it, to do them, it doesn't look good in the short term. And here's the reason. If you were to take $6,000 and invest it last January, obviously your performance would be whatever your risk was. Your growth would be just flat. Whatever the return was is whatever you got. And you'd very quickly be able to see, I'm lagging or I'm doing better or whatever. If you took $50 and every week you started investing, you're raising your average cost, but as the $50 start to add up, you're having less of an impact on your average cost. Therefore, your average cost is lagging behind a little bit, and you would notice, I get this a lot, people send me the Betterment statements, and they go, Dustin, can you beat what I'm doing at Betterment? And I go, well, it's not fair, right? Because you think you're lagging behind the S&P, you're probably doing just fine, although I'd love to have the business. The honest answer is because you're inching in and dollar cost averaging in a market that keeps going higher, you're not. It's a flaw in the chart. You're not seeing the exact growth there. I don't have a great way to say that. I've been trying to work on a cool way to kind of point that out to people. But yeah, I mean, in the meantime, a dollar cost averaging does look like you're not doing as well versus a lump sum deposit. But at the end of the day, if you can't afford to do the lump sum deposit, that's what it's there for. That's why you have to be able to do that. So I don't have any problems with it. Not at all. But lump sum investing 100% of the time. Every study from Harvard all the way down to, like, not down to, but from Harvard over to like Goldman Sachs, the wealth management division, they've all done studies on this. It just doesn't matter. Lump sum investing beats over the long run when you do fixed deposits like that. Yeah. Can you explain what the over-the-counter stocks are, pros and cons? Over-the-counter stocks are just simply public companies that don't meet the criteria to be listed on a major exchange in some way there. They're not all penny stocks. It could just be a company that's become delisted from a major exchange for some reason. So it depends on which ones you're talking about. A lot of the penny stocks, the issue there is people think it's rigged. In reality, it's not really rigged. What it is imagine if we went public, nobody would care, right? Jazz Wealth, we went public. I don't think it's allowed, but if we went public, nobody would care. We'd have like $1 share price or something like that, right? So what happens is we need to get attention. So what smaller public companies do is they say, hey, marketing company, we don't have a lot of money, but we need attention. We'll give you a bunch of shares. And the marketing company says, okay, we're confident we can get you attention, get people to come buy your stock, and so we'll take your shares, because if the value goes up, they could sell the shares. The problem is you got to give them so many shares. So when these over-the-counter lower price stocks start to bounce, you see an immediate sell-off. Well, a lot of times that's marketing companies, lawyers, things like that have to use the pops to sell on profits, and people then think that the process is rigged, but it's really just a business transaction. How is Carnival Cruise still up with all the virus stuff going on? Well, I mean, it's down since the virus started, but today being up is fine. Why don't we do 529 plans? We could. To be honest, we could. It's just one of those things. Doesn't come up very often. A lot of people elect to do custodial accounts or use the Roth trick to fund their child's education. So just a lot of times there's a better way to go, but not that 529s are bad or anything, but we could. That's it. Did you miss the Fed Minutes? No, Fed Minutes came out today. There was a lot of blah, blah, same thing we already knew. I don't mean to downplay it at all, but that's what it was. Yeah. Yes, Robert. So I'm not going to say that symbol. But yes, it did. So that was the reason. So YouTube had, what'd they call it? It wasn't a strike. It was that it didn't fit the criteria for them to post our video to the masses like I hope it hopefully does, because we mentioned that. yesterday. I tried an experiment. I didn't say it, and I didn't say it today, and I won't say it today. So we'll just see. So we have more data. But yes, 100% yesterday was just fine. How interesting is that they hear, they hear, and they can translate and go, nope, this isn't going to fit. I thought it was very, very interesting. We'll see what today has to do there. Roku's retracement here in the short term you don't really like. So the question is basically on Roku there compared to the others. In the short term, Roku, the way it sold off there after that pop, you'll find it hard to attract the bulls to say, yeah, I want to buy that in a meaningful way. So I would expect to see more volatility there in Roku, just based on what happened the last 3 days there. So that's that one. All right, I think we've covered it all there. I appreciate you guys coming and hanging out with me today. If I helped you in some way, maybe you'll hit the subscribe button or the thumbs up button. Let me know your favorite jazz song down below. I could go on forever. I could post a song every day. I will. But let me know what you like, and maybe we'll take a listen and see if that's something we want to mention. I appreciate you guys hanging out, and have a great rest of your day. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.